I could not have guessed this rumor was coming if you gave me 1,000 different tries. And you're going to be shocked by this, probably just as shocked as I was. And, well, it could be bad news for Tesla. We will have to wait and see what Elon Musk says. But here is the next massive rumor for Tesla stock. Apparently, Elon Musk-led group offers $97.4 billion for control of OpenAI, escalating battle with Sam Altman over ChatGPT. Wow, what a headline, and what a way to drive down Tesla stock over 3% today. Now, this was news that came out towards the end of the trading day today, really in the last final of minutes, and I imagine this is news that's going to be talked about for a while now. I say this is a rumor because the Wall Street Journal made a whole article about this as if it is something solidified, okay, that he's doing. Like, Elon Musk has not confirmed this. Until Elon confirms something, it's as good as a rumor. Now, rumors can obviously have a negative impact or positive impact to stocks. And it does look like Tesla reacted negatively to this, because if Elon Musk is a part of this potential buyout or takeover, buying a stake in OpenAI, not exactly sure how this is going to shape up. The valuation of OpenAI is, well, double the amount that they offered. So it would likely just be a stake in the company. But if Elon is obviously a part of that, that could mean Tesla would have to, Elon would have to sell Tesla stock. And, that would be a whole shit show. Okay, obviously, anything that has to do with Elon selling Tesla stock or may cause or Elon to sell Tesla stock is always and probably forever going to be seen as a negative for Tesla shares. Okay, so this is the big rumor. And until we hear something from Elon, I would consider it a wild rumor and or speculation. Apparently, Sam Altman has already responded with a counteroffer. He says, "No, thank you, but we will buy Twitter for $9.74 billion if you want." So the situation's just getting weird at this point. And I think bottom line, what it means for Tesla investors is nothing. I think towards the end of the day today, once big money started to kind of hear this news, they kind of started to freak out a little bit. But in all reality, I don't think this was ever something Tesla investors should have taken seriously. It does seem like Sam Altman is rejecting the offer, which we kind of all knew they would. And, well, apparently sending a counteroffer in which Elon's obviously going to reject that as well. So I would expect Tesla stock, is going to be under maybe a little bit less pressure now, albeit, who knows, they could up the offer to buy OpenAI. So this is a developing situation, but from what I can tell you now and report to you now is you really don't have much to worry about. I don't think this was anything really serious from Elon. I don't think Elon owning XAI and the biggest supercomputer in the entire world really is considering buying OpenAI. Obviously, if he could, I'm sure he would, but valuations as per the latest capital raises for OpenAI are anywhere from $200 to $400 billion. It's going to be a stretch to get that much money. But hey, that's why it's a developing situation. We will keep you guys posted on what the new developments are, but that is what we have so far. Just when you thought it was over with Sam Altman, where he says, "No, thank you, but we will buy Twitter for $9.74 billion if you want," Elon Musk comments and says, "Swindler." It looks like this might actually be like a legit thing where Elon is offering money to buy OpenAI along with other investors. And then you really just can't make this part up. Like, this is straight out of a comic book. And you really can't make up this. Polymarket says set up a boxing match to settle this. This just gets crazier and crazier. Elon Musk confirms that FSD only gets better from here. He also confirms that Tesla is still on track to launch autonomous ride-hailing in Austin in June, and this is the big part, and roll out to many cities in America by the end of this year. It seems like right now that's really just going in one ear, out the other for Wall Street en masse. And I think Tesla's 25% sell-off or so from all-time highs is just presenting an opportunity. Next thing you know, we're actually going to have robotaxis. And it's hard to justify the sell-off that we have seen so far with that information, with something as revolutionary as robotaxis. Not in just one market, but on a mass scale. Tesla launching robotaxis in one city is one thing, but going on to launch them in other cities, completely different story for literally the Tesla story. That is something that Waymo is not doing. And I think pretty soon it's going to be one of those things where even if you're not exactly bullish on Tesla's valuation from a numbers perspective, it's kind of like Nvidia, where in 2024 especially, people said, we just have to own it. Like, they're going to grow into the valuation. We don't care what the valuation is today, because if we miss Nvidia, yeah, we're going to lose some clients. If we miss the next big stock or next big revolutionary product or technology, we're going to lose clients. And I think that's pretty soon what the story could start to become around Tesla stock. Because again, who's doing anything this big in AI? I don't know of another company that is, okay, from an actual mass market perspective. And the chief designer for Tesla also confirms to Jay Leno that the Cybercab rides will start in June. There was some uncertainty whether this would be, Model 3s or Model Ys, consumer-owned vehicles that would start on the Robotaxi network, or if this would actually be Cybercabs rolling out on the Robotaxi network. But it looks like it will be Cybercabs that actually roll out in Austin in June. And ever since this news came out for Tesla, it just seems like Tesla stock sold off even more. Like, Wall Street is just really not paying attention to Tesla right now. And that's just fine if you're a savvy investor, if you understand these things that we're talking about, because it'll hit Wall Street like a ton of bricks when it actually starts to happen. And I think the same is true with humanoid robots as well. That will hit Wall Street like a ton of bricks, and people will all of a sudden say, oh my gosh, look at all the progress that Tesla has made in humanoid robots and AI in general. And Tesla, I believe, will be one of the top performing stocks in our markets this year, if not number one. But keep in mind, I own a lot of Tesla and I have a heavy bias here. And well, maybe there's some big bad boogeyman that we are missing in the Tesla story, but I can't find it. And it's not, Elon's political affiliation that's going to be the demise of Tesla. That just sounds insane for people to say that, which I've actually seen some people making that argument on X. And in all actuality, Tesla may have opened up Republicans to buying EVs in which they may not have been in that market before. Now, as I shared with you guys in the video earlier today, hedge funds and institutions, including big money like BlackRock, is going out and buying Tesla stock on this discount, on this dip that we have seen from, again, $488 per share down to $356. Like, that's a big drop when Tesla's actually gotten more bullish. Like, there's more to be bullish on now than there was when the stock was at $488. Besides the price, which, as Warren Buffett says, like, the price doesn't mean anything. At some periods in time, Wall Street's fearful, sometimes for no reason. And that's just when you get discounts. Okay, price tells you nothing. The fundamentals of Tesla have not changed at all. Not one bit, at least to the negative. We've got reinforcing, positives, right? Like Tesla hiring new employees for Optimus mass production, the new Model Y to launch soon, confirmation of the robotaxi network, as I shared in this video, that's still coming in June. All kinds of positive things Wall Street has really discounted, and they've paid attention to nothing, like literally nothing. Hypothetical negatives for Tesla that are irrelevant. And my point really here is retail investors have been panicking. I mean, it's sad to say that for the first time in I don't even know how long, as long as I can recall, it looks like big money is buying the stock and retail is selling. That tells you something. Okay, take a look at the option activity today for Tesla. 206 different trades from hedge funds and institutions, totaling $372 million, with a positive order value of 90%. This is hedge funds and institutions buying the dip in Tesla, using leverage in the options market. And yet Tesla stock didn't have a great day today. Retail investors continue to be sellers of Tesla, which I don't know what's going to happen. I don't know if now is the time to sell and the stock's going dramatically lower. It's going back into the 200s, blah, blah, blah. You're going to hear a lot of people start to say a lot of outlandish things, okay? But I would argue if big money is going out and buying Tesla in the numbers that they are, the story for Tesla has probably gotten better rather than gotten worse. Maybe that's a judgment call or a wild statement to some, but hedge funds and institutions tend to have more information than we do. And when they are buying like crazy, it's usually not the time to fade the story or to leave the stock, in other words. Sentiment for the SPY today, despite the rise you're seeing in markets, is still bearish at 36. 1 day ago, it was bullish at 30. CNN's Fear and Greed Index today is popping back into neutral territory. On Friday, it was at 39. So this is actually an 8-point jump in the CNN Fear and Greed Index. It's actually a very large move in the bullish direction, okay? Even though we're not even at quite midway of neutral, which is 50, you're still suppressed overall. This is a big improvement in what some people would say is overall sentiment today. Market momentum is fear. Stock price strength, extreme fear. Stock price breadth is fear. Put and call options, greed. Market volatility is neutral. Safe haven demand is neutral. And junk bond demand is currently in greed. If we take a look at the percent of stocks trading above their 50-day moving average, that is up almost 3% today to about 49.5%. So still more than half of stocks are not above their 50-day moving average. There is a lot of room for broader strength in our markets before we're anything close to like overextended or too optimistic or anything along those lines. Considering last week we hit a 1-year bearish high, 42.9% of survey respondents to the AI Investor Sentiment Survey expect the stock market to be lower 6 months from now. That very rarely ever happens. Okay, like it's a 1-year high. And we've seen a lot of things happen in the last year where markets were, panicky. So, that's one of those contrarian indicators that says if so many people are bearish, maybe now is a good time to be bullish. And that is what you should consider. Okay, just consider it. Think about it as a thought. Neutral investors at 23.8%, which is historically on the low side, and bullish investors as well, historically on the low side at 33.3%. Now here today in After Hours, you will be getting earnings from Astra Labs. Astra Labs does a lot of business directly with NVIDIA, AMD, and Intel. That one could be important. Fluence, Vertex, Excelis, Medpace, Lattice Semiconductor, Inspire, and others report today in After Hours. Tomorrow morning, you have Shopify, Coca-Cola, Humana, BP, AutoNation, S&P Global, and Marriott International. This morning we did have earnings from McDonald's, which McDonald's stock did well, but it was some of the worst revenue numbers we've seen for McDonald's in quite a while. So keep that in mind. Tuesday and after hours, Super Micro, Upstart, DoorDash, Lyft, Freshworks, Energy Transfer, Gilead, Confluent, Welltower, and Zillow Group. Later on this week on Wednesday, Vertiv, another AI name. They really have the liquid cooling technology for GPUs and data centers. CVS Health, Barrick, Generac, Biogen, Kraft Heinz, and Ryder. Wednesday and after hours, Reddit, AppLovin, Robinhood, Dutch Bros, Albert Marley, The Trade Desk, Cisco, MGM Resorts. Thursday, another big day, Datadog, CyberArk, John Deere, Crocs, Sony, and GE Healthcare in pre-market. And after hours, Coinbase, Twilio, DraftKings, Applied Materials, Airbnb, Palo Alto, Roku, Wynn, and Republic Services. But really the big catalyst for tomorrow, and likely the big catalyst for really the rest of this week, at least until Friday's retail sales report, is the testimony from Jerome Powell coming tomorrow. Now, Jerome Powell has an opportunity here, okay? And I should mention we have CPI on Wednesday, so the day after tomorrow. Jerome Powell already knows what the inflation numbers are going to look like. Jerome Powell could take a very dovish approach towards tomorrow and testifying in front of the Senate, or he could take a lot more of a hawkish approach, this wait and see approach that, you know, we should hold here for longer. Now, I think it's a little bit different tomorrow versus obviously like a press conference, because Jerome Powell is going to have hours to talk, okay, at least 2 hours or so to talk. And markets are going to hang on to every word Powell says, just like they do during the press conference. But like the press conference, you only have like 40 minutes of questions and answers. And, one word that Jerome Powell says can flip the whole thing bullish or bearish, when perhaps that's not really what he was going for. Like 2 press conferences ago, not the last one we just had, but the one before that, December 18th, everyone was like, oh my gosh, Powell's a hawk and all this, when he really only said like one thing that stood out as maybe a little on the hawkish side. I don't think Powell meant to be as hawkish as he came off December 18th. And he really sounded bullish the last press conference. Okay. Powell could take this opportunity to really set the record straight in his stance on Fed policy and the economy and the labor market, and so on and so forth. Also, it will be interesting, I think, from the market's perspective, to hear what deficits could look like if Jerome Powell answers that. He may not answer that, or what kind of effect that could have on inflation. Jerome Powell could confirm that maybe Doge or some of the cost-cutting efforts in Washington are going to be positive for inflation progress. I would expect something like that is answered, or at least asked. If he answers that or not, I think is a totally different thing. But I think Jerome Powell is overall going to sound optimistic on bringing down inflation and rate cuts. It will be interesting to see what Jerome Powell says about the labor market, considering you now have like 70,000 government employees that have accepted a buyout offer. There's going to be more labor supply coming to our markets here in the next coming weeks and months. And while that could drive up the unemployment rate, and whether or not Fed Powell acknowledges that as potentially a reason to cut rates will be interesting. And again, I just overall expect Powell is going to come off a lot more dovish than we thought. And for markets that still are assigning about a 20% probability of the Fed raising rates this year, I don't think that's what we're going to walk away with. I don't think we're going to walk away with, thinking the Fed has any chance of raising rates. I think it's going to be far from that. Now, the markets are currently expecting the first Fed rate cut July 30th, where you're pricing in a rate cut by 44.3%, a continued pause at 36.2%, and a 2 rate cuts at about 17% by July 30th. June 18th is the close one right now. Technically, you're pricing in a pause still, 46.0% chance of a pause, and 43.8% chance of a rate cut. So you're about 3% off of, pricing in a rate cut versus a pause on June 18th. I actually think via Powell's statement, you're going to see the odds of a June 18th cut dramatically rise tomorrow. And I think you're also going to see the odds of a May 7th cut also rise. Currently, the odds of a cut on May 7th is only 22%. I think that's going to go up quite a bit coming tomorrow. Probably closer to about 50-50. 50% chance of a cut, 50% chance of a pause, based on the testimonial that Powell is going to give. Because after all, I don't think Powell is nearly as hawkish as Wall Street believes he is. I don't think the Fed is as concerned about tariffs at this point as they were previously. Okay. We haven't got much for tariffs. And as long as, 25% tariffs on Canada and Mexico do not go into effect, and that leads to a trade war and, back and forth tariffing, then we really don't have much to worry about from a tariff inflation perspective. And I think the Fed is starting to realize that. Now, obviously, I'm speculating here. Jerome Powell could come out tomorrow and be very hawkish, but I just don't think that makes a whole lot of sense right now. And from that perspective, I do think we could soon be in a breakout for the S&P. If you get above this downtrending line here, you're going to break out to the upside, break a new all-time high, and set a new trading range, just like you did really from the previous market highs, December 6th or so, through January 16th, where you kind of traded lower during this time. You formed this downtrending trend line. Once you broke this on January 17th, you went up about 2.5%. And then we've kind of been in this pattern of, gap down Monday, rise Tuesday, Wednesday, Thursday, bad day on Friday, gap down on Monday, right? That's kind of been the pattern. Although today you broke that. You did not gap down on Monday. Hey, if we continue on that same pattern, Tuesday, Wednesday, Thursday, it could be pretty good days. And so far this year, Tuesday, Wednesday, Thursdays have been very green days. Okay, you're going up like 0.5% on most Tuesdays, Wednesdays, and Thursdays on a kind of, running rate. Okay, I believe the annualized return on Thursday is like 130%, right? So, the Thursday, kind of extrapolate that over the course of this entire year, and markets would be up 130%. Like, midweek has been pretty good for markets so far this year. And if that continues and we break out from here, then that's going to set you into a whole new range. And I wouldn't be surprised if small caps, cyclicals, industrials, financials really are the ones that do a lot of the lifting versus like big tech. But after all, let me know what you guys think about this information down below in the comment section. We do have CPI coming out on Wednesday, so regardless of what Powell says, all eyes are going to be on your CPI report, in which expectations are kind of high. It's, we're expecting higher inflation on a month-over-month basis, and I think that's going to come in on the low side. So honestly, I'm pretty excited for what this week has in store. Keep in mind, Jerome Powell will testify in front of the Senate tomorrow, as well as on Wednesday. At the same time, again, CPI comes out. So definitely going to be a pretty volatile next couple of days or so. Ladies and gentlemen, enjoy the rest of your day, and I will see you in the next one.